government is ready to talk with startups that are looking to move overseas. Finance Minister Nirmala Sitharaman said this in her address at a think tank in Washington, D.C. earlier this week. She also assured that the government will do as much as it can to help startups stay in India. While simplifying domiciling options for startups, allowing them to list on global stock exchanges are among the 160 policy asks that investor body IVCA has put on the table for the government. The finance minister, as she promised in this year's budget, has set up an expert committee to address the concerns of private equity and venture capital investors. This expert committee, headed by former SEBI chief M. Damodharan, has been asked to submit its recommendations by December. After conducting a comprehensive study to remove end-to-end frictions in regulatory policy and taxation so that it becomes easier for private equity and venture capital investors to invest in India and in turn power India's startup economy. The investor community, of course, is pleased with the move, but as veteran investors have told us, the challenge before the government in carrying out an end-to-end regulatory cleanup is nothing short of what was done to put in place the Insolvency and Bankruptcy Code in 2016. Not all practices of alternative investment funds are baked into tax laws. There is still no tax parity in sale of unlisted versus listed shares. ESOPs continue to be taxed twice. A lot of domestic capital that is locked up with PSUs, insurers and provident funds is yet to be funneled into startups. The list, as we said, is long, and the industry says the setting up of the expert committee is a step in the right direction. Interestingly, this also comes at a time when the funding winter is getting frosty, with Indian startups suffering their worst quarter in terms of VC funding in 2 years. Hello and welcome to Young Turks. I'm Shereen Bhan. You're watching India's longest-running show on startups and entrepreneurship. Joining me on the show today, Ashley Menezes, partner and CEO at ChrysCapital. Ashley is the vice chairperson of the Indian Venture and Alternate Capital Association, or IVCA. Also with us, Gopal Srinivasan, chairman and managing director of TVS Capital Funds and board member of IVCA, and Pratibha Jain, group general counsel and head of corporate affairs at Everstone Group. She's also the co-chair of IVCA's Regulatory Affairs Committee. Pratibha, Ashley and Mr. Srinivasan, many thanks for joining us here on CNBC TV18. So let's get started with this committee. The finance minister had made the announcement in the budget. It's been a long wait, but finally we do have a committee in place, and it's headed by this former SEBI chief M. Damodharan. Ashley, let me start by asking you about the progress that's already been made. I understand that meetings have started. IVCA has met with the committee. What was the first impression in terms of how this committee intends to look at this 160 list of demands that you're putting on the table?
Thank you, Shereen, for having us on the show. This was the ask for an expert committee was something that we've talked about for some time. It is necessary in our view to capture a few things. Initially when private equity and venture capital has been investing in India, it's been through a myriad of laws that have been set up for other purposes, and there's no real set of regulations that has addressed this holistically, considering the fact that there are some global funds, Indian funds, capturing all of that. So this was definitely a need of the hour. We were very happy to note that, the finance minister in her budget speech in February, talked about setting this up. The committee has been functioning, quite well. I think we had a meeting. The meeting was very, very constructive. The committee members were receptive to suggestions. The list may be a long number of 160, but broadly there were 2 or 3 sort of categories of us, right? One was merely in the form of clarifications. What is the best way to reduce some friction, ease of investing? And then the other was, the committee actually asked us to come up with innovative ideas that can help streamline both the investments into India as well as attracting long-term domestic, foreign capital into India. So it was ideas being thrown out, and as I said, the committee was extremely receptive to it. Don't go by the number of sub points because some of these are minutiae points, but I think conceptually, it was a very, very constructive and productive session.
Okay, a constructive and productive session. Mr. Srinivasan, let me address this issue with you because, when we last spoke about this, you had said that what is required has to be of the magnitude of what the government attempted to do with the bankruptcy code, with the insolvency and bankruptcy code. They had then amended 41 sections of law and repealed one law and brought in a new law. You said then we need something like that for an end-to-end cleanup of the PEVC startup ecosystem. Now, as Ashley said, there are some issues that require clarification. There are some issues that need to be addressed to alleviate the regulatory friction. And there are ideas that the committee is also seeking to try and see what can be done to unlock domestic capital and continue to see a flow of foreign capital into the startup ecosystem. So let's start with addressing clarification and regulatory friction, because those are the two main points that the committee is going to look at. That was the terms of reference when the finance minister had announced the committee in her budget speech. So let's address those issues and prioritize for me what you want the committee to do. What are the specific areas that you want the committee to focus on?
Thank you, Shereen. Thank you for having us, and thank you for actually being, in some sense, a virtual expert committee on issues to do with startups, VC, and PE at your show. I think it's been one place where one can listen over time to how this industry has evolved. I think this committee has the potential, if its recommendations are accepted, which I believe they should be, given the stature and standing of the members of this committee, of actually creating close to a WhatsApp moment, to use that oft-used expression, for this industry, in terms of removing friction, putting in accelerants, unleashing domestic capital, making foreign capital flow easier, and most importantly, making investments into startups and growth, including delisting, very much easier. So you have very nicely summarized the 5 buckets. I will just say the most important issues would be, number one, bake in all the business model and vocabulary of this industry, the AIF industry, into the direct tax code, the indirect tax code, so that things like carried interest are clearly defined, clearly classified as long-term capital gains. Make sure that management of foreign money in India does not attract GST when pooled into AIFs. Make sure that when you look at the value at which assets are carried in a fund, they are truly pass-through in nature, and they're carried at the cost of commitment, which means the cost at which investors have invested into the fund, rather than the cost of purchase of securities. These would be, in my mind, the top 3 things from the industry point of view. From the startup ecosystem and the company point of view, I think there will be a lot of interesting challenges. I will name 2, if I may. One is delisting. There is a great opportunity now, given the vast number of listed companies in India, that many of them, private equity can come, take over those companies. But the delisting procedures, I'm sure you must have heard, Shereen, in your show, I think the word cumbersome could be a mild way of stating it. So there could be a lot of liberation of those companies by getting private equity if the delisting procedures are made much simpler. There could be issues like that from the point of view of startups, some minor issues relating to type of instruments being more flexible. I think we need to address that as a central issue, that all of this finally means more money for startups, more money for growth, and better use of domestic capital. They may be the 3 big framing outcomes of this committee, rather than what the industry, after all, what are we? We are simply agents who have the ability and appetite to deploy risk capital. But the beneficiary of this will be the startups and growth, and in turn, the country in large.
Yeah, I think you've appropriately framed that the direction in terms of recommendations of this committee need to be to ensure that we actually continue to nurture the momentum that this ecosystem is seeing at this point in time. And Pratibha, that's exactly what I want to address with you. While there are many specific recommendations that the industry has put on the table for the committee to examine, very often in India, we do have the tendency to be overtly prescriptive when it comes to regulation and rule-making specifically. Is that something that you want the committee to be mindful of?
Oh, absolutely, Shereen. And India has its own challenges in terms of being able to enforce laws. So, you understand where the prescriptive nature of regulations come from. They want to prevent fraud because, it's very difficult to actually get any relief for fraud. Having said that, financial investors, such as private equity VC investors, are not used to sitting with lawyers and trying to understand each word, and our drafting also gets very complicated of laws. So if you recognize, especially for the AIF regulations, which has been already provided a minimum threshold of 1 CR of investment. So, it's not your retail investors that are coming into these AIFs for investment. These are already big players. In that regard, the AIF regulations, as they started and created the onshore fund industry, they were to start with very principle based, and provided a lot of leeway to create funds which mirror the global structures that foreign investors are used to, so that you can attract that foreign capital onshore. I think continuing that thought process is extremely important, because you need to be able to provide global structures that investors are used to onshore. So I think overall also in our regulations, that prescriptive nature, when we deal with investors, they don't understand. And you add on to that into the fund industry, which globally is very, very bespoke. You don't have standard structures. It's not like listings where you have standard rules. So that becomes very important. In terms of the other prescriptive regulations, there's a reason they came up about, there was sometimes for the promoters, sometimes for strategic investors coming from other countries, not really geared toward financial investors. I think, if you create a separate category for financial investors, which is your private equity VC investors within the existing regulations, that will also help streamline regulations and make them less prescriptive for this class of investors. I think that will significantly also help.